Karo start? Equalization levy, that is the topic for today. An important topic for this May 17 exam, as introduced by Finance Act 2016. So it has been introduced for the first time, and very importantly it is governed by this Finance Act itself. It is not a part of Income Tax Act. So the provisions related to this law is going to be covered by this act itself, and this is what we have to study now. Now this levy is also being called, or a nickname that is being given to it is Google tax. Why it is so? Because predominantly company like Google is going to be, the services that is being provided by such companies is going to come into such tax bracket now. Here the levy has been introduced so as that tax is which was not getting collected earlier on services provided by such company will now be covered, but somewhat we can say by way of reverse charge, that is by the person. It will be collected from the person who is enjoying that service or who is the recipient of the service. Fine. So understanding this, we will move directly to the law, what the law says. Here, if services are being provided by a non-resident, so service provider should be compulsorily a non-resident, and further it comes up with one more additional condition where such non-resident doesn't have permanent establishment in India. If such service provider is such person, the first part gets fulfilled. The second part is the service recipient should be either of these two. First one, service recipient should be a resident who is enjoying this service for carrying out any business or profession in India, or a service recipient is a non-resident but having a permanent establishment in India and he is enjoying this service for a business or profession linked to such permanent establishment in India. Then such services are going to be covered under this tax bracket, and the levy, the charge, or you can say tax rate for such service is being specified at 6%. Now this 6% tax should be paid in what manner? Here the service recipient is required, just like TDS law is required to deduct from the amount that is to be paid to service provider. From that they have to deduct 6% and remit it to Government of India. So this is the primary working of this particular equalization levy. Now let us move to next part, which is a part and parcel of this levy, that is, there are three exceptions that have been provided. So in these three cases there is no need for a service recipient to deduct equalization levy. Now the first one is if the non-resident who is providing that service, so the service provider is having a permanent establishment in India, then in that particular case a recipient is not required to deduct this tax. You are not covered by this levy at all. The second one is, now this is a monetary limit which is going to play a very important role, where a resident for any particular business or profession enjoying these services, the aggregate amount of such service, if it is not more than 1 lakh, then there is no need to deduct equalization levy. And the third one is where any person who is enjoying this service is enjoying it for any purpose other than business or profession. In that particular case there is no need to deduct this equalization levy. Let us take few examples on these three exceptions so that our concept becomes clear. Now let us say that the service provider is Google, obviously a non-resident, and not having any permanent establishment in India. So such Google is providing a service to whom? This service is getting provided first of all to a resident, say a company, let us say a particular online commercial company where the products are getting sold online. Now they are taking a service of Google for that is for advertising their products on Google, and they are making a payment to Google. Now this relates to business or profession of that particular person, so they are going to be subject for equalization levy. Further, now such company, whatever they are paying to Google in a particular financial year, let us say financial year 16-17, the aggregate amount should go above 1 lakh. If it is not crossing again 1 lakh, then there is no need to deduct such levy. And the third part of this exception, what we now need to understand, let us presume that this Google has a permanent establishment in India. Then again such levy is not being attracted. So if we take this example, if we keep this example in mind, it will be easy for us to understand these three exceptions. I'll repeat it one more time. Now, first of all, the person who is enjoying this service should be enjoying it for the purpose of business or profession. Second part, the aggregate amount he is going to pay to such non-resident should be more than 1 lakh in a financial year. And third one, such non-resident who is providing this service is not having any permanent establishment in India. So if we understood these 3 points, then I think it will be very clear when to attract such levy. Now moving to next part, which services are liable for this particular levy? The first one, what they have very specifically said, is online advertisement. I think that is the predominant part what they want to cover here. Say companies like Google earn their revenue by way of online advertisements. That is their main source of revenue. So say suppose a particular company, let us say Snapdeal or eBay, is trying to promote their website by placing an advertisement on Google. So obviously companies like Snapdeal or eBay might be paying money to Google for promoting or for providing an advertisement space at that particular website whenever a person gives a Google search. Now that money or that service, money paid for such service is going to be subject for equalization levy. Then the second part what we need to understand is for anything related to digital advertising. So maybe Google might help certain people for providing digital advertising. They may not directly advertise that product, but providing a services related to this, then that is also going to be covered under this bracket. And third one, which will be covered over a period of time, is any other service which is going to be notified by central government. So wait and watch. Over a period of time, central government may keep on adding further services here. One service which everyone is talking about, that might be the Amazon, might come under this bracket where online products are getting sold, maybe. But right now there is no such thing notified by central government, which will come over a period of time. So I hope this basic part is very clear. Now let us talk about procedural part. In procedural part we need to understand one thing very clearly, that this amount, whatever 6% that has to be deducted, will be applicable from 1st June 16. So this levy is attracted from this particular date. So your monetary limit of 1 lakh has to be seen from this particular date. Further, this levy of 6% is flat levy and there is no need to add any surcharge or cess on such particular amount. Further, when you need to deduct this, now for this I will suggest you try to compare it with TDS law. It will be very simple for you. This levy has to be deducted just somewhat like TDS law at the time of credit or payment, whichever is earlier. And whenever this amount will be deducted, the time to pay it to government is again somewhat similar what is given in TDS law, which is 7th of the month following the month in which tax is being deducted. Now, this has to be obviously then paid on monthly basis. In a particular month, whenever that levy is deducted, you have to pay it by 7th of the next month. Next part, what we have to understand in procedural part is filing of return. Now again, I like to compare it with TDS law, and somewhere with while comparing with TDS law, I'll also like to compare with your normal income tax returns, so that it will be easy for us to remember. So first of all, if I talk about TDS returns are to be filed quarterly, and you file your income tax returns annually. Now for equalization levy, you have to file your return annually. There is no need to file return quarterly. Then next, here when you have to file your return annually, Finance Act 2016 very specifically says that the date will be notified, and it is already being notified, which is going to be 30th of June following the financial year in which such levy is deducted and paid. So if I am talking about financial year 16-17, if I have to file my equalization levy return, it has to be filed by 30th June 17. If for comparison, if you want to remember, I'll say it is just similar to annual information return, where the due date is again 30th June. So by this date you need to file return of income. Now moving ahead, there is always going to be a probability or a possibility that a person doesn't file return within due date. So there is always going to be a scope to file belated return. Now in income tax, we have a provision of 139(4) for belated return. Now here, somewhat similar to this but old law. Old law means the law which got introduced by Finance Act 2016. If we keep it aside, what was there earlier, same thing is being prescribed here, which says that belated return can be filed within 2 years from end of financial year. Now here we are using the concept of financial year. While talking about 139(4), we say within 1 year from end of relevant assessment year. So the date somewhat comes similar to that. So for financial year 16-17, the last date to file my belated return is going to be 31st March 19. After this, I cannot file even a belated return. Now talking about revised return. Here, just similar to your income tax returns, where if you find any mistake apparent from record in filing your return, you should get a scope to revise your return. And now the due date is exactly similar to 139(5), which says that you can file your revised return within, again same, 2 years from end of financial year, which is within 1 year from end of relevant assessment year, so which comes against to same date, 31st March 19. So that is related to your filing of return. Now let us move to next part, and that is interest part. As discussed earlier, the due date to pay equalization levy is 7th of the next month from the month in which tax is being deducted. Now, what if you pay late? In this case, the interest is similar to old TDS law, which is flat 1% per month or part of the month for the period of delay. So for the period of delay means from the due date, whenever you are liable to pay that, so from due date to date of payment, whatever is the period of delay, for that you have to pay interest of 1% per month on that particular amount. So these are the important points related to equalization levy. Now, some provisions in Income Tax Act has been amended or introduced to bring in line with such particular levy getting introduced by Finance Act 2016. Here we have to understand 3 important provisions for that. First of all, section 10 proviso 50, that is clause 50, we have to understand, which is related to exemption. Second one, that what we have to understand is a disallowance provision which is given in PGBP 40A 1B, a new clause that has been added, 1B. And now here there is no provision that has been introduced, but then we have to understand the relevance of this section 195. What if equalization levy is not being charged? So let us now discuss equalization levy in relation to these three sections. The first one, let me take this in an example. Let us say that I am A Limited, an Indian company, paying 5 lakh rupees to Google for online advertisements. So at that moment I will be liable for equalization levy to be deducted, where I have to deduct now 6% on that rupees 5 lakhs that are getting paid to Google, and I'm going to pay it to government. So government has got its share of revenue, it has got its tax. So now Google should not be forced upon to pay tax again on that, and therefore this exemption comes into picture, which says very clearly where a non-resident has earned any money on which equalization levy has been deducted, the same will be exempt in the hands of non-resident. If you see the wordings, it very clearly says if the equalization levy is deducted, means there will be two further possibilities. Possibility number one, there is no need to deduct any equalization levy. Why so? Because the aggregate amount is not more than 1 lakh. The services are not enjoyed for business or profession, or a non-resident has a permanent establishment in India where the services from whom the services are being provided. So where you are not liable to deduct equalization levy, in that particular case this exemption will not prevail, means that non-resident is liable to pay tax on that, if obviously covered by section 5 to 9. That is what you have to study. Second, suppose the person is liable to deduct but he fails to deduct. What if he fails to deduct? Then again, whether such the non-resident can continue to claim exemption? No, because equalization levy is not being deducted. So I hope everyone understood this exemption. So this exemption very clearly calls out for one thing, where it says if any non-resident has earned any money on which equalization levy is being deducted, that income is going to be exempt in the hands of such non-resident. Now, the provision for disallowance. It is just similar to what is being provided in 40A1 and 40A1A. Somewhat similar to that. Why these two provisions came in earlier law? So that people will be tax compliant. Means, suppose if any person who is liable to deduct tax at source and doesn't deduct it, then his expenditure should get disallowed so that he will be a tax compliant. On a very same line, where now this 1B that is being introduced, which says whereby any person who is liable to deduct equalization levy as per this chapter and doesn't deduct it, or if deducts it and doesn't pay it to Government of India, then 100% of that particular expenditure is going to get disallowed, and again allowed in the year in which it is paid. Now this 1B has been drafted in similar to clause 1 and 1A. Means what? Here the time limit to pay is up to due date to file return of income. So there is an ample time that is being provided. So say suppose now I am liable to deduct equalization levy, where I deducted in the month of say January 2017. I should have paid it by 7th of Feb. But let us say that I have not paid by 7th of Feb, but I paid that particular tax in the month of June 2017, where my due date to file return of income is 31st July or 30th September. Then I paid it before due date to file return of income, then there is no question of disallowance. But if I fail to pay it up to due date to file my income tax return, then it is going to get disallowed. But again, as what is there in 1 and 1A, it is not a permanent disallowance, it's a temporary disallowance, and it will be again allowed in the year in which it is paid. So that is your 40A1B. The next part what we have to understand is the impact on section 195. Normally any amount paid to non-resident which is taxable in India and you don't deduct tax at source, okay, then there is a disallowance under 40A1 related to interest, royalty, penalty, then the deductor is liable to pay from his own pocket, so many other provisions. But primarily 195 talks about amount getting paid to non-resident. Here, where the equalization levy is getting attracted, the amount that the tax component is being covered not by Income Tax Act but by a separate chapter, and therefore this provision again will not apply. So now one has to see very clearly that the implication of 195 will not come in a case where equalization levy is getting attracted. But say suppose due to some reason equalization levy is not getting attracted because the aggregate amount is not more than 1 lakh, or the services are not for the purpose of business or profession, or a non-resident has a permanent establishment in India. In that particular case, again 195 will be alive, and then you have to deduct TDS then rather than equalization levy as per 195, which is going to be actual tax liability. So one has to remember these three important provisions related in Income Tax Act related to equalization levy. We'll just sum up these three provisions one more time. The first one is exemption provided under section 10 clause 50, which very clearly says if a non-resident earning any income on which equalization levy is getting deducted, so tax has been received by government, in that particular case that particular income is exempt in the hands of non-resident. But then very importantly, equalization levy should have been deducted. Second, if any person who is liable to deduct equalization levy and doesn't do so, then in that particular case 100% of such expenditure is going to get disallowed in the hands of such particular resident. If he deducts but don't pay up to due date to file return of income, again it will be disallowed and allowed in the year in which it is paid. And lastly, section 195, where equalization levy is getting attracted, this section is of no use, no need to apply this. But where equalization levy is not attracted, then one has to be careful in seeing that you go to 195, and if that amount is taxable in India, then proper tax is being deducted. So these were the important points related to equalization levy. Now this chapter is obviously going to be very much relevant for your exam in May 17. Do expect a question of roughly 4 to 6 marks on this particular chapter, whereby primarily you have to concentrate upon these things. Take down these points which will be important for you. The first one is who should be a service provider. I hope everyone understood who should be a service provider, and that is a non-resident not having a permanent establishment in India. Second one, who should be a service recipient. Your service recipient has to be a resident if it is getting used for his purpose of business or profession, or it can be even a non-resident but having a permanent establishment in India, and those services are used for carrying out business related to that permanent establishment in India. Then next, 3 exceptions where equalization levy is not at all being applicable. First, if the non-resident who is providing the services is having a permanent establishment in India, for example Google, let us presume, is having a permanent establishment in India. Second, the aggregate amount of services provided to a particular person is not more than 1 lakh rupees. And third, the services are being provided for any purpose other than business or profession. Then the levy amount is flat 6%. I am using this word, please keep it in mind very clearly that it is flat 6%. Don't add any surcharge or cess on that. Here this levy should be deducted while making a payment to a non-resident, and then it should be paid it to Government of India just like a TDS law by 7th of the month following in the month in which it is deducted. And when you are liable to deduct, whenever that amount is credited or amount is paid, whichever is earlier. Further, this may not be that much important, but you need to remember the interest clause. That is 1% per month or part of the month you have to pay interest where you are late in making a payment. The next one, again not that much important, but you should be aware about it, filing of return. By what time you should file your return of income. That is, first of all, the return has to be filed annually. It has to be filed by 30th of June from the end of the financial year. Then there is a provision for filing belated return and revised return, for which the time limit is same, which is 2 years from end of relevant financial year. And then along with this, you have to remember the impact of 3 income tax provisions. I hope everyone understood this. First one, section 1050, where exemption is provided to the service provider if equalization levy is being deducted. Second, if the service recipient fails to deduct equalization levy or deducts but don't pay up to due date to file income tax return, then there is 100% disallowance and allowed in the year in which it is paid. and if equalization levy is not attracted, then 195 provision will still prevail and you have to go by normal TDS provisions. So I hope everyone has understood this particular chapter. So I thanks a lot for giving a patient hearing, and I hope this will be useful for your exam.